Hello guys, this is ObaFX Trading Academy and welcome once again to my YouTube channel where we do mainly the top-down analysis of different financial securities ranging from cryptocurrencies to Forex currency pair, derivative synthetic indices. And today we're going to be looking at the Forex currency pair AUDUSD, which is simply the Australian dollar paired against the United States dollar. So as you all know, I do my top-down analysis using pure price action trading strategy, and currently I'm on the monthly time frame. And like I always make us to understand, what we try to achieve on the monthly time frame is to get a directional bias from the market, and on the weekly time frame we look for a structure of the market that we can work with, probably like a candlestick chart pattern. On the daily time frame we try to see the most recent trend of the market, and from the 4 hour we try to get our entries. We refine it in the 1 hour and in the minute time frame. So let's see how I get to do this starting from the monthly time frame. Now, mainly looking at the chart in front of us, it's very easy to say that AUDUSD is in a downtrend. So in actual fact, the market has been making a whole lot of lower lows and lower highs. However, if we were to zoom in, we can see that in the past few months, this market has actually been ranging. Now, what do I mean? It has been making equal highs and equal lows. So to put or make this clearer, I can just map out the area for us to really concentrate on it. And of course, you all see that I'd already mapped out my key zones on the monthly time frame. That's another major thing I do on the monthly time frame, mapping out my major key zones. So this colored part now on the chart would be where we'll be concentrating on. Why? Because the market has been moving from this particular resistance zone down to the support, back to the resistance, down to the support, and as we can see, the market is currently heading back to the resistance zone. So we'll be dealing, instead of with a trending market, we'll be dealing with a ranging part of a downward trending market. So our directional bias in this case, because the market has just left the support zone and heading towards the resistance zone, so our directional bias would be upwards. So we believe that this market is moving upwards to this resistance zone. So the next thing we will do would be to go to the weekly time frame, where we can now look for a particular chart pattern or whatever it is that the market is presenting before us to work with. And to do this, so first of all, we can see the range of the market much more clearer now, and we can see that the market left this support zone and is still heading upwards. So just to guide us, I use three basic tools for my analysis: support and resistance zones, trend line, as well as Fibonacci Retracement Tool. So this might be like a very good time for me to include these tools on the weekly time frame before I look for the structure of the market that I can probably work with. So if I place this here, this is a bounding line telling me the most recent direction, or the recent direction, or the direction that the market is heading. So we have like two touches of this trend line on the weekly time frame. So because the market made a swing from this point, from the second touch on the trend line upwards, we can see that this was a clearly broken area. So I can include my Fibonacci retracement tool from the swing low down to this swing high. And of course, I always map out what I call the Fibonacci retracement tool golden zone, which is the zone between the 61.8% or 0.618% and 0.5 mark. So if I'm to do that, what I try to do when I do that is to see if this particular zone aligns with a resistance or a support zone. In this case, because we are looking at an uptrending market within the range of the market, we can see that if we pull this to the left, that it aligns with areas where price had been rejected before. In other words, in the past, it acted as what resistance zone. So this way, I already have like my confluence all together. I have my FIB2, I have my trend line, I have my major zones where price is heading towards. So another thing I want us to take note of is we can now go to the line graph to see the particulars. So we can see that we have like a simple bullish structure. Now, what do I mean? We have something like this with price making a low, a higher high, or a higher high, and now price is retracing. So this similar to what we have here. So price left this point where we have our FIB2, came up and is retracing. So I call this the simple bullish chart pattern. How do I mean? When price comes back to this zone, then we're expected to look forward buying opportunities. But like I always try to explain, price has a liberty of coming below this zone. So long as price doesn't take out this initial higher low, then the market is still trending upwards. So let's try to apply this now to what we have here. And of course, if I'm to this was what I did by including my FIB2, and we can see that price has just come into the Fibonacci retracement to golden zone. Another thing that gives me confidence too that this market is ready to continue upwards is if we go back to the candlestick chart, we can see that with price coming, with sellers pushing price downwards, we have what we call a doji candle. A doji candle, it is simply telling us that the selling pressure is losing momentum and that buyers are getting set to come into the market to push it upwards. Remember, we're coming back to this resistance zone. Now, having all this together, it will be pertinent or important for us to go to the daily time frame to see it in a much clearer fashion. And of course, if I'm to remove this, let's take out those things that have served their purpose for us to see them clearer. And of course, we can see our FIB2, we can see price currently at our Fibonacci retracement to golden zone. We have two touches of the trend line, and we even have more candlesticks indicating that buyers are getting set to come into this particular market and take it upwards. We have like a hammer, we have a long leg doji candle, and of course, all these are encouraging signs that buyers are getting set to take over the market. Another very strong strong indication of buying pressure about to kick off is the presence of this double bottom. Of course, we know that double bottom is a strong bullish reversal chart pattern. So we have this double bottom here. Let's do this properly. Okay, we have this double bottom. We can see that the neckline has just been broken and it is currently being retested. Now, this retest coincides with our Fibonacci retracement to golden zone. So we can see that putting everything together, this the information we're gathering is telling us that the market is about to start moving upward. So we've seen candlesticks within our key zone. We've seen a double bottom with the neckline being retested. The next best thing will now be to go to one of our entry time frame, which is the H4 time frame, to see if this market is ready for us to get in. Now, on the H4 time frame, to be frank, I took this trade just not long ago before trying to do this video so that others who would see it later on or as early as possible would take advantage of it. Now, why did I jump into this trade? Right within our key zone, if we go to the line graph, we can see that there's a double bottom here as well. So if I zoom in, we can see that the double bottom, the neckline was taken out and price just came back in to retest the zone and it's currently within this place. And the reason I jumped into the trade was because of this particular setup, and currently I have my stop loss here. Now this is like an aggressive way of entering this market because there's still a strong probability that price might take out this bottom, meaning it would be a fake, and then come make a touch of this trend line before heading upwards. So I entered this particular market not aggressively. So when I say not aggressively, it means I used like a smaller lot size compared to what I would have used before. So in case I get to be taken out, or once I'm in good profit, I can move my stop loss to entry and then wait. So if the market comes downwards later in the day and takes me out, then I can look for entries on this time frame. So all in all, everything I'm trying to say is that AUDUSD is heading upwards, or is showing a strong probability of heading upwards. So if you get to come across this, you can compare this with your analysis, and if you feel that this analysis makes sense, then you can either hop in if you're the aggressive type of trader like myself, or you can sit on your hands and conservatively wait to see if it will come down to this trend line or will make another a new higher high, and then you can wait for a retracement and to get into the trade. So if I'm even to go to the H1 time frame, you can see that you can see what I'm talking about. So the bottom now becomes much more clearer. You can see the neckline taking out and price came into the zone, and this was why I got in. So I got into this trade somewhere around here, and my stop loss was about 20 pips, and my first take would be price coming to this place. So that's like a risk to reward ratio of about 4. So my stop loss was about 20, I think about 20, 22, 22 pips here. So like I said, this is my own outlook on this market, and you can always compare this with your own analysis, and if it makes sense, then, or you feel it makes sense, then you can join as we hope to make money from the market today. So like I said, this is a trading academy. If you're starting out in your own Forex journey and you want us, you feel that there's a way we can help you, then you can always reach out to us via the details on my YouTube bio. Then I also have a Telegram group where I drop free signals as I come, free trading signals as I come by them. You can join the group as well. And more importantly, it will be very cool on your part if you can click on the like button and share with others to gain as well. If this is your first time of coming across this channel, like I said in the introduction, all we mainly do is top-down analysis of different financial assets. So you can click on the subscribe button, turn on your notifications so you'll be the first to know when subsequent videos drop. Thanks for stopping by my channel, and have a fruitful trading day ahead. Cheers.